Hey everyone, today we're going to dive into the VanEck Semiconductor ETF or SMH, and in this video we're going to talk about its portfolio holdings, its performance, and what are the reasons why people are so bullish about SMH right now, and we're also going to talk about its potential risks, and lastly we are going to compare SMH and SOXX, which is another semiconductor ETF. So the goal of SMH ETF is trying to replicate as closely as possible before fees and expenses the price and performance of the SMH US listed semiconductor 25 index. So what is this index? This index, you can think of it as a very specialized list that tracks the 25 largest and most liquid US exchange listed companies in the semiconductor industry. And all of these companies must have a market cap of at least 150 million USD, and they have to generate at least 50% of revenues from semiconductors. And here is the top 10 holdings of the SMH ETF, and the largest holding is NVIDIA, which accounts for almost 21% of the entire portfolio, followed by TSMC, which accounts for almost 14% of the entire portfolio. And the third largest is Broadcom, which accounts for about 8.5% of the entire portfolio. So what are the reasons why people are so bullish about our SMH ETF? One of the reasons is that the semiconductor market is projected to reach $1 trillion by the year 2030. And as you know, that semiconductors are crucial for the modern world, as they are in computers, smartphones, appliances, gaming hardware, medical equipment. Another reason is the end user segment, such as the AI PCs and smartphones, are also expected to grow. On top of that, some people believe that the generative AI remain a long-term tailwind, and the market for generative AI could potentially explode to $1 trillion market in the next 10 years. Here is a word of caution. This is all prediction and projection and might not materialize in the future. So now let's take a look at the bearish case for SMH ETF. Personally, I think it's very important to consider the potential downside risks first before you make an investment. So what are the potential risks of investing in SMH ETF? One of the potential risks is that SMH is making highly concentrated bets on technology, especially those involved with semiconductors. And as you can see, that its largest holding is NVIDIA, which accounts for almost 21% of its entire portfolio. The concentration risk is very high. Another concern is that the semiconductor sector is currently overvalued. The rapid growth and significant demand for the semiconductors have driven up stock prices. So if the sector faces a downturn, or if the earnings of these semiconductor companies don't meet high expectations, stock prices could fall sharply. And also current market sentiment towards semiconductor industry is quite exuberant. So there is a possibility that the prices may be priced for perfection and not necessarily reflect the underlying fundamentals. Lastly, there is a lot of hype surrounding generative AI, which has led to increased capital expenditure in the tech sector. So if the spending does not translate into expected technological breakthrough or revenue growth, it could lead to disappointments, and capital expenditure spending could slow, and the semiconductor industry might face significant corrections. As NVIDIA accounts for about 20% of SMH portfolio, so let's take a look at it more closely. Is NVIDIA overvalued? Recently, some big name investors have significantly cut the stakes in NVIDIA. For example, David Tepper's Appaloosa Management sold off about 3.7 million NVIDIA shares, which is about 84% of their holdings. So now NVIDIA only makes up about 1.4% of David Tepper's $17.3 billion portfolio. Stanley Druckenmiller's family office also reduced its NVIDIA shares, offloading about 1.5 million shares, or about 88% of the position. Activist investor Elliott Management also trimmed NVIDIA's stake, though it was a smaller amount of 50,000 shares. And Soros Fund Management, the investment vehicle founded by billionaire investor George Soros, also exited NVIDIA, selling around 217,000 shares. So it looks like that these high-profile investors are offloading NVIDIA, which could be a sign of changing view on the stock or a broader market shift. And NVIDIA's CEO has sold 500 million worth of stock since June this year, although he still holds a significant amount of NVIDIA stocks. So is NVIDIA overvalued? For the past few quarters, NVIDIA posted some very impressive numbers with strong growth in both revenues and net profits. However, there are some worries about how NVIDIA can fend off competition and maintain its market share. For example, NVIDIA was forced to cut the price of its highest-end chips in China, those due to weak demand and competition from Huawei. And NVIDIA is also facing a lot of pressure from its competitors such as AMD and Intel. And even major tech companies like Google, Microsoft, and Amazon are developing their own AI and computing solutions, trying to reduce the reliance on NVIDIA's products. So with rising competition, it's not going to be easy for NVIDIA to maintain or even expand its market share. So personally, I think it makes sense to reduce exposure to NVIDIA. Lastly, let's take a look at SMH versus SOXX. These two are quite similar since both are focused on the semiconductor industry. And SOXX is another popular choice for the semiconductor exposure. And while they track similar sectors, the portfolio differ in holdings and weighting. As you can see in this table, the top 10 holdings in SOXX and SMH. The largest holding in SOXX is Broadcom, which accounts for about 10% of the portfolio. The second largest is NVIDIA, which accounts for about 9% of the portfolio. And the third largest is AMD, which accounts for about 7.5% of the portfolio. On the other hand, for SMH, the largest holding is NVIDIA, which accounts for about 21% of the portfolio, and followed by TSMC, which accounts for about 14% of the portfolio. And the third largest is Broadcom, which accounts for about 8.5% of the portfolio. And this is the performance comparison between SMH and SOXX. As you can see that SMH outperformed SOXX for the past 10 years due to its oversized exposure to NVIDIA. As you can see that NVIDIA return as of 26 August 2024. In the past 5 years, its price has gone up by almost 3,000%. And in the past 10 years, its price has gone up by about 27,000%. That's very impressive returns. If you look at the Seeking Alpha value grade for the top 10 holdings of SMH, by the way, for Seeking Alpha value grade, A+ is the highest, while F is the lowest or the worst. And you can see that the value grade for the top 10 holdings of SMH, NVIDIA's value grade is F, and for the other stocks, value grade is either F or D. So I don't recommend buying SMH or SOXX at current levels. But if you really believe in the long-term growth of the semiconductor industry, then I would say that it's less risky to put your money in SOXX because its concentration risk is lower than SMH. And also it's safer to start building a position at different price levels after a healthy pullback in price.